I think it's good from a company standpoint of view if you want to have further investments coming into the power sector. We are working on a situation on a place where we want to move a lot more to electric vehicles, which means the demand for electricity is going to increase. Of course, you're talking about electric buses. You're talking about a lot of things moving towards different sorts of uh, rather than crude and petrol and diesel and gas. So if all of that is required, you need investments, and allowing these companies to make a profit and retaining 15%, I don't think that's a negative thing. It's good, and I think that's fine. I mean, government has continued the policy, so that's a good thing.
Okay, but do you have any recommendations in the power space? A lot of these companies, including the power financiers, Samir, have gone up very substantially. Is that does that mean that most of the run-up has already happened?
So a large part of the run-up for all of these companies, yes, in the near term is already through, right? So let's talk about the largest player in the power space and especially thermal NTPC. So NTPC stock has gone up from about 180 to 300 plus in the last maybe I think 6 odd months, which means that a lot of the valuation gap catch up that had to happen has happened. Now NTPC is not only a thermal power generator, but they're also getting into renewable energy. They're setting up a lot of solar-based plants, right? Solar-based, the setup that they're doing. Of course, once all of that kicks in, what we will see is some profitability increasing, and that will take a little bit of time. Luckily, solar plants gestation periods are a little shorter than the 4 years that thermal goes through. They're about 1.5 years. So we will see some growth in profitability coming from that angle, which is why the re-rating in the stock has happened. But I think to a large extent that is done. Now, when you come to the power finance companies, which you mentioned, I think a lot of the valuation discount that was going on in these power financing companies is well behind. In fact, they're trading at probably higher valuation multiples than they have historically ever, even when when the last power run happened in 2006, 2007. So a lot of the positivity is captured in. Now, I don't deny the fact that the growth opportunity for solar is quite large, and the risk being a little lower given the fact that these gestation periods, like we mentioned, are slightly shorter. So, the cash flows for these companies start happening quicker, and probability of an NPA goes down. Plus the discoms, where they were highly leveraged also, they're getting better cash flows, and which is allowing these power finance companies to ensure that NPAs remain low. But all of that is in the price what we discussed. So I don't think there's too much upside. I would be a little skeptical of going out and buying these levels. I think we will go through a consolidation. I don't expect the stocks to correct major, but we will go through a period of consolidation where the stocks will probably not give any return in the near term.
All right, let's start off with the questions. And the first one is coming from Fazalur Rahman, and I hope I'm saying that right. He's bought 1 lakh units of BCG, that's Brightcom Group, at about 20 rupees. The share is in a little bit of downturn today and is trading around 19 rupees. Ayush, how does it look on the charts for this? Should they continue holding this?
If you look at the charts of BCG, it is currently consolidating. If you look at the weekly charts, and in the daily charts, taking the resistance of 200-day moving average. But if we look at it closely, I feel the stock is at the current support level, which is at approximately 19 rupees. So I feel with a trailing stop loss of 19 rupees, it can be holded for a long term. And once it crosses 20 on the closing basis, we can see up to 23 levels in this.
Okay. All right. We've got several other questions as well. One on Grasim, and by the way, one of the stocks that we were focusing on earlier today. This is, we don't know who this is from. I don't see a name. So, by the way, in case you are messaging us on YouTube or on WhatsApp, do tell us what your name is and ideally where you're writing in from as well. But I'll come to you, Samir, on this one. We've got a viewer that's bought at levels of 2,117. Should the viewer expect that the price will correct with the rights issue coming in and priced at 12.5% discount to yesterday's closing price? And interesting conversation this morning, we were wondering whether the paints business and the expectation of revenue addition from the paints business is currently in the price.
So I think revenue addition of the paints business to some extent will be there, but I think what's more important to see is how much they're able to capture of the market share. Now, if you ask me, I think, the paints business is a growing industry. And as you can see, a lot of these companies, Asian Paints, Nerolac, all of the others have been doing extremely well, posting very good growth. Now, with the increased competition, there are two things that's going to happen. One, what you're going to see is some amount of margin pressure, because at the end of the day, everybody wants to retain their market share, and you have two new players, which is DSW and Grasim, which are trying to take into the market share. So what you're going to see is margins being a little lower. So from that point of view, for Grasim, it's a positive because they're going to be capturing new business and getting more profitability and some amount of margin. But for the other players, it needs to be seen. But since your question is specifically on Grasim and whether the stock price could come off given the fact that the QIPs are at a lower price. So the QIP being at a lower price, the rights issue, not a QIP, a rights issue, it's going to the existing shareholders. So all the existing shareholders are also getting the benefit of investing in at the lower price. So it's not necessary that the stock price goes down. The company is getting capital at extremely healthy valuations, right? If you look at the earnings yield compared to the interest rate, I think there's a massive benefit for Grasim at even 1870, whatever the price is. So I think it's a positive. The stock has run up. Will it consolidate again? Yes, it will. But if the investor who's bought Grasim at this price, at the higher price, has the 1 to 2 year horizon, I think he will make good returns. Invest in the rights when you get this rights shares and take advantage of that.
Next one is from Khurshid, and he's talking about Alok Industries. Now, the stock is buzzing today, up about 12% right now. He's bought the stock at 22 levels. The stock is currently close to 30 rupees. He wants to know the 1 year target. Samir, do you have a target on Alok Industries?
So we don't have coverage on Alok, but the reason it's been running up recently is the investment, the money put in by the promoter, Reliance Industries. So the thought process is that if they're putting in this much money, there is upside. But I think the stock has probably run up in the near term too quickly, and I don't think the operations are going to turn around that quickly for them. So I think whenever you get a chance, we'll take some money off the table and probably. But I don't have active coverage on the company, so I can't tell you more than the fact that what I.
Sure. Do you hold the same view as well? Should Mr. Khurshid take off some money off the table?
Because of the shoot up in today's session, and with the quantity remaining, he can keep a stop loss of 26.50 on this.
Okay.
So no target for the next 1 year from your end also?
For the next 1 year, it will be quite difficult from my end, but for the next month, I can give it because it's a technical setup, it's a small setup.
Sure. Go ahead.
So I think it can go up to 36 levels.
I'm almost certain that you guys are not going to have coverage on this because it's a penny stock, and I would encourage our viewers to refrain from asking about penny stocks because really the coverage is not going to be significant. The name of the counter, and I must confess that I haven't heard of this one, EARUM. Do you say that as Erum Pharma? I'm going to check with you, Samir. Have you heard of this company? And what can you tell us about it?
Sorry, I haven't heard of it, sorry.
Okay, fair point. So why don't I ask you this? If you are to look at the pharma space, and if you are to contemplate a fresh entry into a company based on the fundamentals, what according to you stands out? And would you say that now is an opportune time to look at pharma? Because valuations not necessarily as stretched as they have been in the past.
So pharma is something that will always do well given the fact that the export market is still something that India has a huge opportunity to grow. Forget the export alone, even the domestic market, you're seeing the consumption of medicines increasing, not only on the, it's not like, it's even things like vitamin D, vitamin B, things like that. I think there's a huge opportunity for pharma in India as well. So companies like Alchem, which cater to this, Alchem actually has a huge, I wouldn't say monopoly, but there are 3 companies that make this vitamin D tablet. Alchem is one of them. That is seeing huge traction in that. But if you were to ask me about the pharma space, I still think the large opportunity comes from the international markets. Now, something like a Lupin, when they get for example, today they've got a approval for an ANDA in the US market for a medicine that caters to diabetes. These kind of opportunities throw up huge profitability for companies because these are huge markets that in the US that you're catering to. So I would still focus on the larger boys who have a big exposure to the US: Sun Pharma, Lupin, Oro. These are three companies I would still think have more upside potential. But if you were to ask me to pick one of them, I think Sun Pharma, because of the differentiation of the product that they're doing, where they're trying to create a brand on some of the generics rather than just working purely on the generic side. So Sun Pharma in the large cap, and in the mid cap, I still think Alchem looks good. Torrent is something that's interesting also in the pharma space, but I would stick to someone where these companies are larger in known size. Otherwise, if you want, you can look at the chemical space where, the APIs are there, like the Divi's lab or something, who are not exactly a pure all out pharma play, but making the raw material for the pharma industry. So Divi's is something that's there. There's Supriya Life Sciences. Those are companies that are also interesting. But again, valuations for most of them are a little bit on the higher side. I would say they're expensive, but they're not cheap either.
Right. Samir, I know you've already spoken about power sector, but we have another question from a viewer. This one's from Sahil, and he's writing in from Surat. He's talking about REC. Now, he bought the stock at 100 rupees, so quite a bit of a profit there, and he wants to accumulate. Now, we're seeing a little bit of stress in the price today. Is it a good time to add more of it in the portfolio?
So again, it will all be dependent on his time horizon. If he's somebody who's looking for maybe the next 4 or 5 years, you could accumulate, but accumulate at a correction. Look, the stock has really not corrected. If you're talking of a run up from 100 to 400, and the stock corrects by $10 or $15, that's really not a correction. Now, I'm giving you REC from the pure point of view of fundamentals. The stock is trading at about a 1.3, 1.4 times price to book, historical, 1.2 times forward. A lot of the positivity that everyone's talking about is on the fact that now they're going to grow. But remember, when you're going to grow as a power lending company, you're going to earn spreads, you're going to earn margins. So it's not like your profitability is going to grow exponentially or anything like that. You're going to grow at about 15-20%, which is fine. Now, if I extrapolate that for 2 years, you're trading at 1 time price to book on FY25. I think most of your PSU banks, which is Canara Bank, Bank of Baroda, UCO, Central, all of these are trading at very similar or in fact lower valuations. Now, REC, PFC, they borrow from these banks and then they lend to these power companies. So I think there's an opportunity for maybe somebody to borrow from the banks directly who can give it at a lower cost compared to a REC, PFC. REC, PFC's growth is predominantly coming from lending to the discoms, which are struggling to raise money from other lenders. So there's some amount of risk that they're taking into their system. Secondly, they're raising money overseas. Now, they say that they're hedged to a large extent, but there is still some part of it unhedged. Now, if the rupee were to depreciate, that would hurt their profitability. So would I be in a rush to buy REC, PSC and average up? No. In fact, I would advise your advisor, the person who's invested, if you have this thing, sell some of the stock, and when it corrects by a good 10, 12%, 15%, maybe add there and then add on, not at this point of time.
Right, very interesting points you made there, Samir. But we'll have to slip into a short break. We'll take a lot of more questions after the break. Stay tuned. welcome back. You're watching Ask Profit. We'll quickly jump into the questions, but before that, you can, if you haven't already written to us, you can send in your questions on the WhatsApp number that's on your screen, or through the YouTube live chat, or through any of our social media channels. Now, let's begin with the questions. The first one is from Mitesh Bhardwaj, and he's talking about EID Parry. He's bought the stock at 478 levels. Ayush, his question is, should he book profits at this stage, or maybe continue holding the stock? EID Parry.
EID Parry's chart patterns are really good. We have recommended this stock to our clients as well, and it is quite positive. I feel the investor should hold it with a strict stop loss of 570, as the markets are not doing quite well today. So he can hold it. He can hold it with a stop loss of 570, and on the upside, I feel it can go up to 620.
Got it. We've got Ramaswamy who's asking this question. CDSL, which he's bought at levels of 1255. Let's pull up the chart and see where it's currently trading. And he's also got Hindustan Aeronautics. I'm not sure where he's bought this at, but essentially he's asking whether there's more steam left. And indeed, the stock is up as much as 3% today as well. I do not know what level he bought at. But on the technicals, Ayush, I'll come to you on these two counters, CDSL as well as Hindustan Aeronautics. If you're holding, do you take some money off the table now?
Let's talk about CDSL first. If we look at the weekly chart, we have a flat pattern here, but the breakout is still awaited. So I feel it can be holded, but some partial profit booking can be done at the current levels. And if we get it again around 1800 levels, then can be bought again. Secondly, let's talk about HL. HL has performed quite well in last 3 days. Again, I feel this stock should be holded by keeping a strict trailing stop loss of 2800. Once it crosses 3000 levels and it closes above that, we can see a new rally up to 3200 levels.
All right. Next up, we have a question from Mohit, and he's talking about IDFC First Bank. Now, the time horizon is 2 years for this stock. He bought at levels of 26. Samir, the stock is around 86. What kind of trajectory do you see for 2 years? Should they take some money off the table, or continue holding it?
So actually, banking sector is one of the sectors that I'm actually most positive on. And IDFC First Bank is one of the counters also where I'm quite positive. And let's put it at this. It's a small bank growing at a very, very aggressive pace. Mr. Vaidyanathan has been growing the bank at about 30%. If you look at the deposit franchise of the bank, right? So it has one of the fastest growth rates when we talk about deposits. They're not higher, giving you some super exceptional rates on the FDs or anything, but just the fact that they've been able to grow for some reason at this pace without giving higher rates is something commendable. Now they have a lending business which is catering to a lot of the consumer focusing kind of businesses. Not businesses, but consumer focusing consumer lending, and that has huge spreads. So in the recent, of course, RBI circular, what it did is it increased the risk weightages. So of course, for the near term, what you'll see is maybe some capital reduction. That they will have capital adequacy. So maybe they may have to slow down a little bit in the growth rate or raise some fresh amount of capital. But barring everything, I think IDFC is doing really well. Since it's only a 2-year horizon, I think I would give it a target of 120 and not more than that in 2 years. But if somebody has a slightly longer term horizon, maybe like 3 to 5 years, I think this stock could be one of the stocks that actually multiplies multifold. So I would be buying, but at corrections for this person, I would say don't sell, because you have a 2-year view, you'll probably get 120, 130 levels.
Okay, we've got a question, I believe, from Prasad on YouTube asking for the 6-month view on Nuvoco Vistas. What is the buy, sell, hold recommendation? Essentially is what he's asking. I don't think that he has taken a position yet. Ayush, it's not done too much in any of the time frames. If I look at over the last 1 year, what is the recommendation over the next 6 months though?
As you said rightly, the stock is consolidating from approximately last 1 year, October 2022, and it hasn't crossed 400 levels on the closing basis. I feel if he wants to buy, he can look for a level of between 330 to 340. That will be an ideal buying position in the stock. And once it crosses 400, then we can see a rally up to 475 to 480.
Right. Next up, we have another question in the banking space, and Sameer, I'm going to take this up with you. This one's from Ankush. He's talking about PNB. He bought the stock. He bought 4,000 shares at 54 levels. Now the stock is around 96. Has given returns of about 70% in the last 1 year. What kind of view do you hold for the longer term for PNB?
So I think the big rally that had to happen in PNB is done with, which was the valuation gap catch up. So PNB was trading at about 0.5 times book value. Now it's up to about 1. Now you have to factor in what is going to be the growth for these banks. It's not about valuation re-rating anymore. So the way I look at it is, if the bank is able to grow at about 15 to 18%, and you see some amount of recoveries coming. So you've got to remember that some of the PSU still have a lot of recovery capability that is left. So they've done a lot of the provisioning, but recoveries are still to happen. So that could lead to some profitable growth. Like I said, probably again go through a bit of consolidation. Don't expect more than 15% return in the stock going forward, if you ask me. But I would still hold on to all of these PSU banks because the momentum is still along there. I mean, still there, I think, in the PSU banking space. So hold on to it. Corrections, maybe closer to 88 would be a buying opportunity. But probably in 1 year, 1.5 year target could be about 100, 110.
Speaking of holding on, we got a viewer, Michael, who's bought BSE at levels of 896. The stock is currently trading at 2,281. Samir, so therefore the question to you is, would you take some money off the table? Do you think that there is at all any froth and any exaggeration in the valuation of this counter? Should you at the very least attempt to recover your cost price?
I would say yes, it's worth taking out your cost price and worth taking some profit, right? So everyone is very positive on BSE because, the F&O segment is something where they were massively lacking in. All that business used to go to NSE, but ever since they've done this weekly contract of options expiring on Friday for the BSE and Monday for the bank BSE, they're able to get some amount of traction and get some amount of market share of that. Now the question remains is, how long is that going to sustain for? If they're able to sustain and capture some amount of the market share of the F&O segment, then I think BSE is a great opportunity because, look, the bulk of the business now is happening in the F&O space. But why I'm not as positive is, if you're just getting it in one index option and really not translating into other stocks or any of the other things, need not be something that can be, a long-term revenue driver. So whatever revenue had to come from that, profitability had to come from that, is done with. Now the question is, what next? Now, again, valuations, like you rightfully said, are a bit frothy. So across the board, be it MCX, which is a exchange that listed, be it BSE, which is an exchange that listed, the valuations have all doubled and tripled. So I get a feeling whenever we get I'm not saying we're going to have a bear market anytime soon, but say in the next year and a half, you have a bear market or 2 years down. What happens is the volumes drop significantly. And as that happens, the operating leverage works in the negative way because all your cost is a fixed cost. And if volumes start dropping, then your profitability gets hammered. So I would think this is a good time to take some money off the table. This is not like a long-term growth story, one directional. This is going to have its up and down. So wait for the correction and you can get a chance to maybe buy it back later.
Fantastic. All right. On that note, Sameer, as well as Ayush, thank you so much for joining us on this show. And viewers, thank you so much as well. Hope that this show answered some of your questions. Of course, we'll be back on Monday to take a lot more. That brings us to the end of this show. From Smriti and myself and the team that put this show together, thank you so much for watching. Do stay tuned. Lots more coming up on NDTV Profit.